Yeah, he's it was a good discussion. So this
Nice.
is like Ethereum month here. Okay, sorry. Well, I guess we started now. All right. So I'd like to welcome Eric Connor, who is an Ethereum core developer and works on the Gnosis project on Ethereum. And yeah, he's here to discuss a variety of topics with us, from ETH 2.0 to scaling, centralization, and all kinds of other stuff. So, welcome, Eric. Thanks for taking the time to come on here to chat with us.
Yeah, guys, thanks for having me. I'm usually on the other side of this thing because I have a podcast called Into the Ether. It's nice to be on the other side of the mic and not asking the questions.
Yeah, very cool. I mean, so just to give you some context, we've been running for like 5 6 years in different forms as a trading community. So we've been around since before the Ethereum ICO, and we're mostly Bitcoin focused. And we're doing sort of an initiative this month of Ethereum focused things. So we had Butter on before, we got you now, and we're going to have the diversify guys on, and also DYDX. And the reason why we're doing this is to sort of focus a bit more on not just trading and looking at charts necessarily, but some of the more technical and development level questions, because I think the best traders are also the ones who understand the technology even more. So we appreciate you coming on, and hope you're not worried about too much heat, because we do have sort of Bitcoin maximalist reputation, but I think that we're pretty fair in general.
Nice. Yeah, no, it's cool you guys are doing that. It's an exciting time for Ethereum and pick some good projects. I mean, DYDX is launching their Bitcoin Perpetual too, so that should be a pretty cool product, I'm sure. Some people might be interested in.
Yeah, that's something we've talked to them about, and partially why we set up the talk was to go into some of their Bitcoin type products, but also just the general trading platform that they put together. And I've been particularly interested in just ETH 2.0 as a from a technical and markets perspective, because it's not like a traditional fork where you you have like a sort of airdrop type thing, or you can just use the private key to access a separate token, or even like Ethereum Classic or Bitcoin Cash forking off from Bitcoin. It's it's a totally different animal, because there's this transition that occurs over 3 phases, and so I've been looking into just understanding it on a deeper level. But why don't we start though, so the people listening out there and the guys here in the chat can understand a bit more about your background. You know, just how you got into crypto, when, and what led you to be more focused on Ethereum rather than other coins.
Yeah, absolutely. I guess I actually started in the space as a trader, so this is somewhat fitting. I've actually been trading stocks for years, probably, gosh, 16, 17 years now, something like that. And I was originally in finance. I was working at a bank in 2013. I ran across Bitcoin, and the idea just fascinated me. Kind of dove into the technology, about the blockchain and all that good stuff that everybody kind of first does. And then, I was kind of day trading it for a year and a half. Of course, kind of the typical beginning, doing fairly well here and there, but getting wrecked after that. So I decided maybe it'd be best when it comes to this to become a holder more than anything. Even though, I still dabble in trading from here to there. But how I got into Ethereum is, it's actually kind of a funny story. I was working with a team. I was actually in an IRC with a bunch of Bitcoin traders, and the Gox hack had just happened. And, some people in the chat were impacted. And about that time, Vitalik was giving the initial speaking engagements at conferences about Ethereum. The first one I saw was at Bitcoin Miami, where Vitalik kind of gave the first, talk about Ethereum. And trading group, and kind of said, hey, why are people trading these centralized assets or decentralized assets on centralized exchanges? This seems like a cool platform to build something. So long story short, myself and 2 others set out to build what I think is the first stab at a decentralized exchange on Ethereum, which was called EtherX. It ended up not getting off the ground, but learned a lot of lessons. And kind of at that point, I just kind of became enamored with Ethereum. I like this idea of being able to build applications on top of this technology. And I kind of just went all in on Ethereum at that point. So since then, I've been around the space. A year and a half ago, with my co-founder Anthony, we launched ETH Hub. We have a podcast and it's an information site for Ethereum, and I'm currently working at Gnosis. We build infrastructure apps and protocols for DeFi, and I'm on the product team there. So I'm just kind of full in on Ethereum, but I've kind of grown up in the blockchain space in general, and actually my first kind of introduction into crypto was through Bitcoin.
So, okay, that's pretty interesting and fitting, as you say. So you got interested in Bitcoin from the trading perspective, but what about, I mean, a lot of us got into it because of the censorship resistance and decentralization and being able to have this independent form of money, which was parallel to the fiat system. Did any of those sort of characteristics attract you to Bitcoin also?
Yeah, absolutely. I mean, I think even though I was kind of trading it just mainly because of the volatility at the time, when I first kind of read about it, the idea of the censorship resistant and all, pretty much everything in the white paper at the point fascinated me. And it was kind of the aha moment where, I graduated college around the time of the first, the financial crisis, my first financial crisis. I guess I'm living through my second one now. But this concept fascinated me. And, especially when it comes to like emerging economies and third world countries where, their currencies are constantly being devalued and becoming worthless at times. So that general like ethos of the community is something, that first latched onto and still totally believe in to this day as well.
So did you actually participate in the Ethereum ICO? There was some of us here who did, so I'm curious if you also got in on it or you sort of a little bit afterwards.
No, yeah. Whenever I started working on EtherX, actually at that point took all my Bitcoin and just moved it over into Ether, and I've kind of positioned since. So yeah, no, those were interesting times. If you look back, like a lot of the initial Ethereum ICO people and people that got in at that point were Bitcoiners, right? So it's kind of funny that we kind of have this weird rivalry today, I would say, although I think there's a very small percentage of difference, and the majority of the visions between the two communities are in line. But actually, most of the people that got into the Ethereum pre-sale were heavy in Bitcoin at the time.
Yeah, and the other point there is that Vitalik was running Bitcoin Magazine and trying to get some of the changes into Bitcoin core code in order to get Bitcoin scripting to a level which would enable a lot of the sort of features that he eventually put on Ethereum. So yeah, it's true. A lot of the people in Ethereum were early Bitcoiners, but I guess another way to put it is that they became sort of Bitcoin skeptics in a way, because there's a reason why they drifted to Ethereum rather than trying to build on top of Bitcoin.
Yeah, absolutely. I mean, I think when it comes to the two communities, the core difference, and I don't really think there's anything wrong with the differences in the two. I think, Ethereum in a way likes to move a little bit faster, which puts a little bit of risk of breaking in there, I would say. I think the community, is happy with how the protocol is now. It's just these kind of different mentalities, but there's a lot of people in Ethereum that are also in Bitcoin and vice versa, right? And I think in my perspective, these two communities are going to live well. We see all kinds of other chains now, trying to compete with Ethereum, and obviously Bitcoin's had a ton of stuff trying to compete with it over time. But I think these two mentalities of Bitcoin and Ethereum are definitely around to stay, together for a long time. And I think it's natural that we were going to have these two mentalities kind of grow out of this. On one one side, there's this idea of, it's safer not to make changes. And, the Bitcoin community is very into the hard cap idea. And I mean, we could get into, is that sustainable or not over time? On the other side, you have Ethereum, which it really just kind of took technology just a tiny bit further, right? Just write a scripting language, a programming language on top of it, and see what people can build. But like at the core, they're extremely similar.
Yeah, I think that's fair, and also, at least at this stage, Ethereum is still a proof of work chain, which follows at least some of the same principles that Bitcoin has in terms of what derives its value. But on this topic then about the principles and how it's different, I guess I would agree that Ethereum is more experimental in the coding and all that, but also in terms of like their values on. Whether something is truly irrevocable on the chain, and in that one example would be the DAO hack, where a number of Ethereum sort of founders and early people in Ethereum had invested in this DAO, which then got hacked, exploited, and a lot of money was lost. And so to recover this investment, they actually hard forked the chain to bail out the investors, which led to the birth of Ethereum Classic. How do you interpret this whole event, and how do you think Ethereum was changed by it?
Yeah, so I would first say, and I say this often, I think immutability is one of the biggest lies told in the crypto space. It will all depend on the event that happens, right? So there's been events, in Bitcoin's history where there was like an inflation bug, and that was way long ago, and it printed, millions and millions of Bitcoin. That was reversed, but it was early on, and people didn't really realize that. And if something major were to happen on any of these chains, I think it might be revoked. It's kind of this judgment between, how dramatic is it versus, keeping immutability alive. And I think at the time, Ethereum was very young. This concept of a hacker controlling a large portion of the network, especially, proof of stake's been in the social contract of Ethereum since the beginning. You look back at blog posts in 2014 from the Ethereum blog and kind of communications that were happening among the community. The idea was always that we're going to proof of stake, and to have some attacker, some adversary having this large portion of ETH in the long run was not ideal, right? So it was controversial. Obviously, the fork, it created Ethereum Classic, but I think at the end of the day, it proved that the community was more on the side of, at the time, removing this hack and taking that out of the history, or making sure that this hacker didn't control a large portion of the network, because the network at the time was at the time. But I don't ever see a reversal of funds happening like that again. But again, I do think this concept of immutability is a very interesting one, because if there's an extremely critical bug that prints 50 times the coins tomorrow accidentally, the community is going to fork that out, right? So it's just like kind of how large is the issue versus the immutability aspect of it.
Yeah, okay. So I would disagree slightly on that point, because I don't think it's about how large the issue is. I think it's the nature of the issue. In the case of the inflation bug you referred to early on, as well as the CVE from 2018, I talked to Blue Matt about that specifically, who he had been responsible for fixing the bug and technically for creating it. But I basically pinned him down on this exact question of like, what would we have done if it was exploited? And he just said pretty frankly that there would be a rollback, and they would obviously have to fork the code to get the bug out and then roll back the inflation. And that's because it's a technical necessity, since nobody wants to be on the chain that has the bug. So of course you'd want to fork to fix that, and you would have to in the process reverse the inflation that was created. Whereas in the case of DAO, okay, the one valid point I guess you made was that staking has been in the social contract from the beginning with Ethereum. This isn't some kind of like surprise that's been sprung up. It's been in the roadmap from the beginning. But what percentage of the network did the DAO hack represent? Do you remember that?
It's a good question. I want to say it's as high as like 10%. I should know this. It's a good trivia question, but it was very high. It wasn't a small portion.
Oh, yeah, okay. I'm not trying to like do a gotcha. I literally don't
Yeah, I know.
remember what it is. But when your point to assess the merit of your point that it posed a threat to the proof of stake evolution of the network, it would really require knowing like what percentage it was. Maybe 10% is sufficiently high where you would worry about it. Someone in the chat says maybe 3%. In any case, I mean, this isn't as applicable to Bitcoin because we don't have this idea to switch to proof of stake where the number of people owning coins and having an influence on validation in the future isn't relevant. But I think this Bitcoin mentality of sound money and focusing on security and elegance in the code on the base layer is it goes hand in hand with the immutability aspect. And I think Ethereum, while they're doing all these experiments and stuff, they open themselves up to more of these bugs that are happening. And when you have so much money, billions of dollars at stake, no pun intended, then it's quite catastrophic. And there's always this it could be potentially catastrophic, that is, if there's some kind of bug which reveals massive exploits. But I guess you always can roll back if it's some kind of bug which it doesn't make sense to stay on the chain because someone would just endlessly exploit it and make it unusable. So you mentioned, go ahead.
Just one thing quickly, I just looked it up. It was 14% of all Ether at the time.
Okay, yeah, that's pretty significant. All right. Well, that's a fair enough point then on the on this in terms of the threat to the future of the network. But let's talk then in more general terms about proof of work versus proof of stake. So obviously you've known about the proof of stake shift happening in Ethereum with ETH 2.0, which we'll talk about in more detail a bit later. But how do you feel in terms of what, we've talked a little bit about immutability, we talked about decentralization and how this adds value to crypto assets like Bitcoin and Ethereum. So what do you think? What do you think changes this equation when you shift to proof of stake, and how because one of the things that attracted me to Bitcoin is the fact that like energy has always been respected by mankind in terms of like that's power. Energy is power and money. And when you have to actually expend energy to validate things on a chain, and then you have a mechanism to make it so that it gets more and more difficult and more expensive to try to mess with the chain, I think that's a very real world requirement to attack and mess with the chain. And when you shift to this idea of proof of stake, the only argument really I've seen in favor of it is that it's environmentally friendly, which is, I guess, one point. But how do you think it will impact value and the perception of value of Ethereum versus proof of work chains?
Yeah, so I guess I'll start with, I actually think for the next coming years, many years, we'll kind of have in the crypto landscape one dominant proof of work chain and one dominant proof of stake chain. Kind of how those two play out as far as market cap and price, who knows? I'm not here to predict. Like we've said, this has been in the social contract of Ethereum since the beginning. So everyone kind of in the community, has expected this to happen. I think it's good to try these different aspects of when it comes to consensus mechanisms or whatnot. And when it comes to, so I hear your point on energy and it's hard to attack and stuff, but at the same time, when I look at proof of work, economy of scale come into play here, and you definitely get some centralization of the network when it comes to proof of work. Now, I'm not saying that can't happen on proof of stake, but at the same time, the barrier to entry to stake is lower. So the plan is that 32 ETH is required to run a validator. So anybody that has 32 ETH can run their own validator. And if you have lower than that, you can also join a pool, much like you could join a mining pool on proof of work. So they do have a lot of similarities. I think, the energy aspect is an interesting one. But at the end of the day, it's kind of just different viewpoints again. I think when it comes to these two communities, we've already talked about one of the differences. I think the proof of work and proof of stake one is another. And it's more like, hey, let's try this stuff and see what works. And I think, this goes along with this. Ethereum doesn't want to be Bitcoin. And I see a lot that people kind of expect it to try to be, but Ethereum's creating its own identity at this point. It's okay for these two communities to be different, right? So, when it comes to staking, there's chains that have been launched that are trying it. Ethereum's close on phase 0. We're definitely going to see how it plays out. But one of the biggest benefits to me is that the barrier to entries are low, and there still is a cost, right? There's a cost to capital when it comes to doing this. You put up your ETH. There's some operation capital behind it. You need hardware. If your internet goes down, you go offline. You start leaking rewards. If you vote wrong, you can be slashed. So there is the potential to lose as well when it comes to proof of stake.
Yeah, and we'll get into that in a second. There's just one more question I wanted to ask about. So you've been around long enough to remember probably the times in Bitcoin where there was value put on this idea of having a fair start, where you don't have an ICO, but Ethereum had an ICO, right, where they collected a bunch of Bitcoin in order to sell their tokens. What exactly what do you value in terms of whether or not I mean, obviously you're part of Gnosis, which did an ICO, so your opinion might have evolved over time, but there was a time I remember back in the day where these ICO projects and this idea of not having a fair start was looked down upon in crypto markets. How have you felt about that from the start? And obviously you feel differently now, but could you talk a bit about this?
Yeah, I think this has evolved a lot over time. I mean, I think if you look back at like Bitcoin in 2009, right, there were probably, when it first started, the first block went out, I think there were like 3 or 4 people that knew about it. So, one could theoretically argue that Bitcoin in a way was pre-mined, right? By the first, 10, 100 people that knew about it, they got a very large portion of the rewards. Now, I know the argument is, yeah, it was out there. Anybody could have found it. The same argument was there for Ethereum, right? Anybody could have gotten the pre-sale and all of this. I think what actually ironically helped Ethereum a lot is, first of all, it wasn't that known at the time. Like, unless you were very tuned into the crypto space, you didn't know much about it. So when it comes to that, it wasn't like large VCs were buying up coins like we see today. There was very little of that. So it was very organic when it came to people that actually believed in crypto. And then after that, I think this 5-6-year period of proof of work helped as well to distribute the coins out. The people like to say we're centralized around the Ethereum Foundation. It's not true. I think the ETH owns 0.5% of the total ETH that's out there now. It's a very small portion of that, right? So over time, it's been distributed nicely. It's obviously very hard to tell how distributed these networks are, right? Like, anybody can split their coins across multiple wallets. It would be great to be able to see, per network, which wallets had the most and how centralized they really were. It's hard to tell. But I think the emergence of ETH2 helps a lot when it comes to these, how centralized is the network, which I just don't see, because ETH2 has a totally different, dev team. It's got a lot of people working on it. There's going to be planned to be 7 different clients building on it. So I think this multi-step process of it being pretty early on when the initial sale happened, then the proof of work phase, now transitioning to ETH2 where kind of power structures are different and stuff like that. All this kind of comes together to, at least I don't sense any concern in the Ethereum community about the initial pre-sale at this point.
I mean, okay, so I'm going to push back on the first point you made about that Bitcoin is a pre-mine. I hear this argument a lot. I hear people mentioning that, they all they did was post it to a cypherpunk mailing list, and they maybe did some secret, not secret mining, but they did some mining while it was so unpopular, and this is somehow on the same level as selling a decent portion of the initial supply to the public for Bitcoin. I think these are 2 completely different situations. I think if Vitalik had not set up this foundation and not done this whole legal structure behind it, and if instead the people were cypherpunks that were dedicated to doing this and decided to then throw it up on a mailing list, and then they got together and started mining it like crazy while nobody believed in it, then Ethereum would probably look totally different in the eyes of a lot of people, and it might, who knows, it might have a totally different place in the crypto market. But instead, they decided to decentralize it with the Ethereum Foundation, which legally speaking had a significant relationship in terms of the ICO sale, in terms of the distribution of the coins, the founders using it to have a budget to operate and everything like that. So it had much more of a sort of company structure. This is no way, in my opinion, comparable to Bitcoin's true cypherpunk origins, which was a totally anonymous guy or pseudonymous guy who put it together, had a few references, very simple, elegant white paper, and then built a community of great cryptographers to improve the code and take it over as a community project. I think it's such a, and this, I think this is why Bitcoin is number one and will forever be number one, because this, someone says in the chat, like this immaculate conception of sorts that gives us Bitcoin today. Ethereum will never have this because they, even though you're right that there wasn't a lot of VC action still, even though Bitcoin at that time had risen quite a bit and there was starting to be interest from various firms. But the main difference there is like Ethereum definitely was centralized, right? So you had a central team which built it. You had a central team that ran an ICO and sold and raised funds through it, using a foundation as a structure to get around some legal issues. I don't think you can compare this to Bitcoin start.
I mean, yeah, this comes down to ideologies, right? This is kind of this, do you need this pure, immaculate conception of Bitcoin? The Ethereum community just doesn't believe that that is a necessity to bootstrapping the technology that we're trying to build, right? When it comes to some of the funds, obviously were allocated to the Ethereum Foundation early on, like you mentioned, that's actually enabled a lot of great things, in my opinion. There's been a lot of funding and development work. The Ethereum Foundation still has a lot of funds they give out to grants. It's helped build a lot of the ETH stuff happening. So, I understand that some people have this view of, the immaculate conception must be the only way forward. But at the end of the day, these funds have really helped the Ethereum ecosystem flourish, helped fund teams. It's not like the Ethereum Foundation is going off and having yacht parties with these funds, right? They're actually giving out grants constantly for teams that are building things on Ethereum. So I actually see that as a win.
Well, they are having unicorn dance parties though, right?
We do like our unicorn dance parties. I'm not going to lie about that.
All right. Okay, one more thing before we get into ETH 2.0, because ETH 2.0 is like one big thing to unpack. So I want to separate that a bit. But one thing that I think everyone's noticed over the past 6 to 12 months, is the emergence of DeFi, so decentralized finance applications. And it's being called like the next layer on Ethereum, even where, and you yourself got involved with DEXs early on and have the sort of finance part of crypto, which crypto is like a combination of the finance guys and the mathematical development guys in cryptography. And so what is your view on DeFi? Like, how come, so Gnosis has sort of a different approach. I'm not sure how Gnosis fits into it, but it's not really like some of the other names are pretty much bigger on DeFi in the idea of like one of the things that I've been interested in early on is having a money market in crypto, because this is one of the bases of how the financial system in fiat works. You have to have a reliable rate of return, which can serve as a way of pricing the time value of money in the given unit. And we don't really have that in crypto, except with staking. Staking becomes like a way of having a rate of return, but there's this emergence of, basically a money market on DeFi where people can use smart contracts on Ethereum to lend, whether it's ETH itself or various stable coins or various shit tokens or whatever. So what do you think about DeFi in general, and how important it is going forward.
Yeah, I mean, I would say first and foremost, DeFi is still in the experimentation phase. I think it's the first really good product market fit that Ethereum has fallen into. We kind of seen this emergence of a lot of different apps, money Legos, because they're all just smart contracts, they can be plugged into one another. And to your point, I think one of the biggest emergences of big usage early on has been this concept of money markets and just simple earning interest and pooling funds together to lend to others that want to borrow. So, Maker's obviously a big player in it. You also have Compound, where you kind of have these tokens enabled and people can lend their funds in a pool and people can borrow them and go, most of the time I'm assuming they're taking them out to leverage, like trade on them. So this is kind of the big first use case when it comes to DeFi. And I think, some people think that Ethereum and DeFi are trying to totally replace the traditional finance system. I actually don't see that at all. I think they're going to kind of live in these parallel universes for years. There's a long way to go when it comes to DeFi. And my hope for it is that traditional finance companies find, just kind of better ways to do certain things. It's very easy to access worldwide liquidity when it comes to smart contracts and DeFi and blockchains. And, I can put my DAI in a pool for someone in a totally different country than me to borrow within a second. There's a lot of barriers when it comes to that in traditional finance. So I think slowly banks, traditional finance institutions are going to see some of these benefits. Is DeFi going to usurp the traditional finance system tomorrow? No, that's just not going to happen, right? But I think it makes sense to have this permissionless. We're starting to have privacy solutions come online with Tornado Cash and Aztec protocol. They're launching ZK DAI, or it's actually launched already, so you can send DAI to each other privately. There's a lot of 10x improvements when it comes to the traditional finance system versus DeFi here. And I think it's really fun to watch the experimentation happen. Would I suggest people go throw their entire life savings in it tomorrow? No, absolutely not. But I'm excited by what we're seeing so far.
Yeah, I mean, there's been a number of hacks over the months in varying magnitudes, but it shows that it is definitely still in the early stages, because despite audits which have been done on certain smart contracts, there's still bugs that end up getting exploited, and before you know it, there's someone running off with tons of money. And sometimes it's not even like a code issue, it's a design issue. And like in the case of was it BCX, which had this flash loan, I would almost not call it a bug. It's just a design flaw in how they structured the market, which enabled traders to take a loan out and in the same exact transaction conduct on-chain trades to arbitrage and manipulate the markets effectively, but still they were trading based on what the protocols were offering. So how is the maturation process of these markets, given that even if the code's fine, they are still not using the right financial engineering concepts to maintain a robust market and ecosystem?
Yeah, I mean, like I said, we're still early in this. And I think, people in traditional finance are used to having insurance, right? Yeah, at least in the US, you put money in a bank account, the FDIC insures you up to, I believe it's 250,000 in a certain savings account. People are just used to insurance fallbacks. We're starting to now see the emergence of insurance solutions, things like Nexus Mutual, Open. I think we're going to see more of these. And, obviously, as time goes on, you're going to see hacks, right? But I would say that, the Makers of the world, the Compounds of the world have been around now for years. They've done millions, if not hundreds of millions in volume. They have not been hacked, right? So you're, of course, going to see these smaller things pop online quickly. People are going to do their due diligence, and that's going to get the headlines. But at the end of the day, some of the larger volume, I think we have 800 million in DeFi now. So people are using it at a fast pace. And I think as the community in Ethereum, we're trying to find ways to inform people better of, is this a risky DeFi app or isn't it? Given it's totally decentralized, permissionless, it's hard to you don't want to create a rating agency, obviously, or some centralized entity to tell people that. But we need to find ways to say, hey, this has gone through proper audits. This, has been around for a long time and has had a lot of value locked in it, or, different types of aspects to measure the risk of these DeFi applications, I think is important and something that the community definitely needs to build out.
Yeah, that makes sense. I think there's, probably many more years until people will really be comfortable with it. These are just mini DAO incidents really that are occurring, and if there's another really large protocol on Ethereum that gets hit, then it could end up really doing some damage in general. And I kind of disagree with trying to run basically a replication of the traditional finance features, like different types of deposit insurance or whatever. I think it's more interesting to innovate beyond what traditional finance is offering. Like there's been innovation in financial products on Bitcoin, like the perpetual contract is pretty cool. That BitMEX started, where you have a peer-to-peer, or not truly peer-to-peer because it's a centralized exchange, but you have traders that are able to use Bitcoin and manage their risk purely in Bitcoin, so that they can protect their stack and use leverage as a tool, and not have to use traditional futures, which are expiring all the time, but having a mechanism where it's never expiring, and there's a funding that is able to maintain the harmony in the incentives. But let's
that's interesting to me. So this is one of the things where I think the Ethereum community has a leg up on the Bitcoin community. The Bitcoin community likes to push on this immaculate conception when it comes to the ICO and the hard cap and just not touching much. But at the same time, I think the Ethereum community is building truly decentralized options for finance. At the same time, I feel like the Bitcoin community is falling back on these centralized aspects. You just mentioned BitMEX for innovation, right? That's a totally centralized company. Things like BlockFi, people are kind of lending their Bitcoin on. So I actually find it surprising that the Bitcoin community isn't more embracing these DeFi applications, to be honest.
It's not that innovative to do over collateralized lending. I guess there's some innovation in terms of making it in a smart contract, but how many of these protocols really have admin keys in the back as a security precaution? How many do you know that are truly decentralized with no admin key?
Yeah, there's a lot. So admin key is a tough term because it depends on non-custodial matters to me, right? Can the admins take your funds? There's very few of those. Even if there's an admin key, can't actually take your funds most of the time. So I agree with you. We need to get there perfectly. I think Uniswap, Augur, Gnosis protocol, these are all, the keys are thrown away and buried and no one can get to them ever. So there are options coming online for that. I'm curious, to see, I guess TBCC is launching soon and stuff. I'm curious to see how much Bitcoin moves on to Ethereum and wants to use DeFi over some of these centralized solutions.
All right. So let's talk about the big topic then, ETH 2.0. So this is the upgrade, if you can call it that, from proof of work to a proof of stake chain. There's then just for background for people that are listening, there's going to be this beacon chain, which is doing proof of stake. And then as Eric mentioned earlier, it's a 3-phase project: phase 0, phase 1, phase 2. Phase 0 is meant to be coming later this year. It's already in testnet. And the idea is that people with ETH now can send it to a smart contract and can initiate the staking if it's 32 ETH exactly in that amount. And they, in order to stake on the beacon chain, you have to have a full node on ETH1, a full node on the beacon chain, and then a validator client in order to stake it. And like you said, there's incentives which can punish you if you get offline or you're not validating properly for whatever reason. Otherwise, there's a consistent stream of rewards. Is that a correct description so far of the ETH 2.0 upgrade?
Yeah, so far, I would disagree that you said if you want to call it an upgrade, it's actually a major upgrade. But other than that, it was accurate.
I mean, I guess I'd mean that in terms of I'm still skeptical of proof of stake in general. I think that it would have been more promising. I see your vision that there can be one proof of work chain and one proof of stake chain, and so Ethereum wants to, stake the claim to being the top proof of stake chain, and we can talk more about that after ETH 2.0 because there's some interesting competition maybe in that area. But so ETH 2.0, it's phase 0 coming up later, and so my understanding is that the process requires basically freezing 32 ETH, and then you can't move it around. And let's say it's on the beacon chain, you can't transfer it around on the beacon chain. You can literally only stake. Is that correct?
Yeah, so there's, like you mentioned, there's phase 0, 1, and 2. Phase 0 does not have state transitions. It's a one-way kind of transfer to the ETH2 chain. So when phase 0 comes along, I don't expect, I think today there's 110 million ETH in total. It's hard to guess how many ETH are going to be staked and come over in phase 0. I would say something like 2 or 3 million, something along those lines. It could be less, it could be more, kind of who knows. I'm excited to see what happens there. But yeah, as far as phase 0 goes, it's the launch of the beacon chain. It's getting people running nodes and validators, but there's no state transitions actually happening at that point.
And then, so phase 1 is about the shards that get created. Is that correct?
Yeah, correct. We start to get shards and data involved at that point. And around that time between phase 1 and 2, then will be the bridge back to ETH1. So at that point, I expect to see a lot more coming on and staked slowly. This is a phase process. I think it's good that we're pretty upfront and not just saying, we see a lot of Ethereum, quote unquote, call them Ethereum attempted murderers, but Ethereum killers is what people in the space say. A lot of them say, hey, the mainnet's launching. I like how we've taken this phase approach and very clear about kind of, what's happening in each. I think the full vision of ETH2 comes after phase 2, but, it's going to take a little bit still to get there. But as far as phase 0 goes, testnets look great. We have a multi-client testnet going. I think we're a couple months away from it. I'm personally running 1,000 validators on a single machine. It's working pretty flawlessly, so it's looking good so far for the launch.
So when you say 1,000 validators, you mean that you have the full ETH node from ETH 1.0, the full beacon chain, and then you have a validator client with 1,000 validator keys. Is that correct?
Correct. Yeah. So obviously this is testnet ETH, so it's easy to gather 32,000 testnet ETH. But I guess shout out to the Prismatic Labs team for sending it over to me. But yeah, I run my own node, ETH1 node. I've run it for years at home. And then I'm running a beacon chain node, and then there's a single validator client, which you can load, anywhere from 1 to however many validators you want up to. And then that validator client talks to the beacon chain node.
Right. So about the centralization point, and so you say that you're running an ETH node, and congratulations, that's a very difficult task. I've tried to sync ETH full nodes. It's a massive pain in the ass to do. I know exchanges that have a huge headache running ETH nodes to support not just normal Ethereum transactions, but also the internal transactions that require crawling around for ERC20 stuff and smart contract deposits. And so a lot of these exchanges, I'm sure you're aware, have to run multiple nodes just to have fallbacks and making sure that they're able to provide consistent services. And as a result, Infura, I think, runs anywhere from 20 to 30% of all the Ethereum nodes. Is that correct?
I don't know what Infura runs, but I will say it's actually pretty easy to run an ETH node. I don't know why this has become a talking point. I have a very basic box. It's got an i3 in it, 520 gig SSD. I think it has 4 gig RAM in it, and I can run a node with no problem. So I don't know why this has become this like weird talking point amongst the two communities. It's actually not a big deal. I mean, if you want to get in like an archive node where you're needing to query the blockchain for like block explorers like and stuff like that, but I mean, this is one of those points where I just can't quite fathom why it's a big deal. If anybody really wants to try it, I'll ship them a box, and you can just put a single line in the command line and hit start, and you'll be in sync in 2 days.
So you're saying that you can sync up in 2 days, but I mean, why, if it's so easy to run a full node, that all of these smart contract ICO projects are relying upon Infura APIs in order to conduct a lot of their transactions?
Yeah, I mean, I guess that's a question for the apps, right? I think we have multiple alternatives now. If Infura goes down, there's 3 or 4 others. To be honest, I can't think of their names off the top of my head, but I know that one of them is Avado's doing like a run your own node type cloud service, where this is the box I run my node on. So you can kind of like offer yourself up to an endpoint. I think there's 15 or 20 different nodes that are running that. So like if Infura were to go down, people could switch over to this. I guess it's just a convenience aspect, right? If you're firing up an app, you're going to use some type of service that's easier to you to run. I don't really see that as a centralization vector. Like Infura can't change the state of Ethereum. I mean, yeah, maybe they go down and these apps stop working for a couple of minutes. I'm sure they have fallbacks to other alternatives out there, but it's not like Infura is actually controlling the state of Ethereum or anything like that. They're simply, offering up endpoints to these dApps to use.
I mean, but I think running your own node and being able to verify and validate everything yourself is more in the spirit of Bitcoin and crypto in general. And I think that highlights another difference between the communities. And I think it's I wouldn't I run my own Bitcoin node, and I am not a huge fan of just trusting, especially if I was, if I was running some smart contract handling a bunch of money, just trusting the gargantuan node runner like Infura, it just seems off to just have this actor processing so much of the traffic on the Ethereum network. You don't find this like a difference in values between Bitcoin and the Ethereum?
Well, I would say it's because there's nothing to actually do on Bitcoin besides send Bitcoin around. I mean, I have my MetaMask wallet hooked up to my own node. So at the end of the day, that's all Bitcoiners are doing. When it comes to apps, you guys don't really have that, right? So you don't kind of run into this problem. I have multiple apps that I can hook into my own endpoints and stuff. So I think it just kind of comes down to what are you actually doing with your crypto, right? Most Bitcoiners, as far as I'm aware, are holding it and maybe sending it back in between exchanges.
Well, no, I mean, there's a lot of layer 2 activity going on where there's a lot of different innovation while maintaining the base layer protocol, and that's part of the principal difference as well, is to maintain the sound money of Bitcoin and not to make a science project out of it like Ethereum. Or I mean, I think someone summed it up best that like the main use cases on the dApps on Ethereum have just been like peer-to-peer penny stocks. Like you just a farm for scammers to run dubious projects and then use it to build money out of largely retail investors that are chasing returns and getting really, really hurt in the process. So there's not really much other interesting dApps that are being run than these kind of ICOs.
I mean, there's 868 million locked in DeFi, and there's 8 million in Lightning Network. So I find it hard to believe that there's a lot of layer 2 activity going on Bitcoin. I think this is one of those things where you guys are just kind of living in your own world.
No, I think it's misleading to. I mean, first of all, Lightning deliberately limits the amount of funds that can be put on there because of, again, this difference in values between, just jumping out there with a science project that then gets hacked and you lose 25 million and it's just like whatever. Whereas the Bitcoin community is much, much more careful. And so when Lightning comes out, they have been more risk averse in terms of just how much money can be put into it. But this also, it doesn't, the volume or magnitude of funds locked up, as you say, isn't, in my opinion, the best indication of actual activity, because Lightning, you have tons and tons of developer activity and tons of users using it, and they're actually using it, right? They're not just doing these over collateralized loans, which are just being I would guess that a lot of this activity is just one left pocket to the right pocket. There's not much actual economic activity here, because who the hell is taking out these high interest loans based in crypto unless they're paying themselves? And so I think that it's probably a lot of this activity on DeFi is actually just one guy paying himself in a different way, or one actor within the same entity paying another actor, and then that creates the sort of appearance of a lot of action when it's not necessarily actually leading to actual transactions.
I mean, yeah, I don't know where you just went there, to be honest. But I'm telling you, I run my own node. I'm telling you, there's 800 million locked in DeFi and very little amount in Lightning. I mean, yeah, I guess you can make up like wild areas, but I mean, people are using DeFi to borrow, to leverage, right? Like this is WhalePool. You guys should know all about that. You're talking about BitMEX. I'm sure a lot of people in here are taking out leverage loans to trade. So yeah, I guess I don't know what to say.
That's the thing, is that when you compare the market rates, it just doesn't add up. Like the rates are like strangely high, and it's economical if people are just sort of engaging in the activity, and then it's not. I mean, why would you spend double-digit annual yields like that? In many cases, it doesn't. It's not, when you compare it to the rates on Bitfinex, for example, where there's actual borrowing and lending happening. On BitMEX, it's not. You're not borrowing and lending in that regard. You are engaging in counterparty leverage contracts with each other. So it's fundamentally different system. Whereas, if you compare the rates that people are taking, whether it's from BlockFi versus some of the DeFi protocols versus the peer-to-peer lending markets on Bitfinex, it just, to me, seems like they're not economically feasible rates in some cases.
Yeah, but I think the community, the members using them, I'm not claiming that these are numbers to take over the financial system tomorrow. They're not, right? Like, we're barely at 1 billion. It's very small. But at the same time, it's people that value decentralization, right? You put your money in Maker, you take a DAI loan out, no one can stop you. There's no stopping you. You do that on BitMEX, they could be shut down tomorrow. The funds could be seized. So I think that's why people are doing it, right? There are people out there that value that.
I mean, yeah, or you could get a bug in the smart contract, which ends up putting the whole loan at risk in some way. So it's a trade-off and different sets of risks that are being exposed to. But I still feel like some of these rates in DeFi, and yeah, you're right. I'm not saying there's proof of this kind of like falsifying of locked funds or something, but some of these rates, when we look at the platforms that are actually doing loans and that a lot of us are engaging in trading on, these rates are like enormous, and they many times don't make sense. Yeah, there's definitely real activity. I'm not saying it's all smoke and mirrors, but it's kind of easy to engage in these locking activity and then say, oh, look how much money is locked up, but how much is real economic activity in the end? That's I'm not so sure about. And in the areas where there are actual trading going on, and you can see the margin trading on BZX and stuff, then you've got real problems because they're not properly designed. So I'm still skeptical about these numbers that are parroted around. I'm still skeptical about how many people are really using it. And in these smaller cases, like what was it, lendf.me or something, they were able to I guess chase down the funds, but these were a lot of people that were actually lending out money, and then they got screwed in the process.
Yeah, I mean, I would say I'm skeptical on the other side of people actually using Lightning Network. I think we hear these parroted numbers that don't quite add up. But I would also say I think, most people in this chat probably feel comfortable using BitMEX or whatever it might be, which I agree with. To go use a shitcoin exchange, you're adding risk. That's how I see using, Maker, Uniswap, or Compound versus the things you're listing, right? Like a BZX or a DForce that just came online. I fully agree with you when it comes to that. Like, you shouldn't be taking all your funds and using those. Like, you got to give this stuff time, make sure the teams are properly audited and things like that. I'm definitely not saying that tomorrow we need to just go all in on this DeFi thing, but I will say there's really people out there using it. And I think kind of turning a blind eye to that usage and kind of writing it off definitely doesn't add up to me.
Okay, that's fair. I'm not trying to write it off. I'm not trying to say it's all smoke and mirrors. But when you look at, I think one of the most used dApps is probably MakerDAO and the DAI system, where you have an algorithmic stablecoin based on, essentially it's a sort of like where people are going long on ETH, which funds the people that are trying to stabilize it, and they have these CDPs and stuff. So they even had this funny bug, and I've actually participated in some of these auctions before, so I have a fairly decent understanding of the system. And I think they probably have the most, quote, locked funds in the DeFi space. They had this funny bug where you could actually bid a price of 0 on an auction to get the ETH of someone who's liquidated from essentially going long on ETH. That smacks to me as a very crazy bug to have for the most popular DeFi platform. And I think when they were trying to resolve it, it was the governance was quite interesting. Can you talk a bit about this?
Yeah, absolutely. This was interesting. This is now kind of known as Black Thursday on Ethereum. And it was kind of when the coronavirus panic was happening. ETH and Bitcoin both tanked. I think Bitcoin or ETH in a 24, 36-hour period or something went from 200 to about 85 or so. And, that kind of, anytime you have a stable coin backed by a collateral that has a lot of volatility, you're going to see some stress in the system. I will say I don't see this as a bug. So what actually happened is you have a CDP, they're now called vaults, right? So you lock up ETH, you draw DAI, you have to keep this 150% collateralization ratio. Now, what happens if the price of ETH drops 50% rapidly, right? So makers fallback is they have these, they're called keeper bots, which is kind of like an auction mechanism to bid on this. If your CDP was called, it gets put to auction on the market and people have to buy this up. Now, if you're a market maker or a whale, are you really lining up to buy this collateral at the price it's currently at when this happens? Probably not. So what happened on Maker is no one was willing to bid on the ETH collateral being auctioned off. Some guy had a bot running that said, hey, if there's no one, I'll bid 0. Congrats to him, right? He won a lot. And the system was kind of like out of whack at that point. Essentially, the maker system, and this is why MKR holders, they have an incentive in the system. If this happens, MKR was printed. This is how it's designed, and kind of like brings the system back into balance. So, I think people read this as a bug. Theoretically, it's not, though. It just meant that no one was willing to buy this collateral that was being sold off. So it seems like the MKR holders are, learning from this a little bit and adding different collateral types. They've recently added wrap Bitcoin, actually, which I personally disagree with because there's some centralized aspects to wrap Bitcoin. But I think you're going to see different collateral types added because it'll the theory is, right, it'll help the system if you have uncorrelated assets because you won't see this like one big price fall result in chaos like that.
Yeah, I have to disagree with you that it's not a bug. I think this is just like the case with the BCX flash loan manipulation stuff, that it's a huge flaw in the design. And it's supposed to be finance guys like us that are supposed to guide the development side of the space to take into account these things. So to say that like someone can bid 0 on an auction for an asset that's worth $200 or $100 and some dollars that's not a bug. It's like, of course, it's a bug. It's a design flaw in the structure of a financial product is just as bad as a bug, in my opinion. Don't you think?
Yeah, I guess it's how you define bug, right? Like if we're talking bug in a conversation like this, I think of bug in code, right? It wasn't technically a bug in code. Maker has this fallback mechanism where they rely on market makers coming in and bidding. The chain got pretty congested during that time. People couldn't get their transactions through. I agree with you. It's not ideal. And I think it was a bit of a black eye on Maker at the time. I think they're going to learn from it. I think they're going to rebuild their market mechanisms or market making mechanisms, auction mechanisms. I think they could do better using some kind of like batch auction versus just relying on the community to be there as a backstop. So there's a lot to learn from it. But I guess I'm basically pushing back on the word bug because, there's a Nexus Mutual is like an insurance platform on Ethereum, and they pay out for bugs. BZX actually had two different hack instances that you've discussed. One was a bug, one technically wasn't, and they did not pay out on Maker because theoretically it wasn't a smart contract bug. So that's just where I'm coming from on that.
I mean, I guess there's not a huge difference between poorly written code and a bug, but in this case, when you're dealing with tons and tons of money, if you write code that accepts a zero price in an auction, that's bad code, no matter whatever word you use to describe it, whether it's a bug or not. But let's talk more about ETH 2.0 stuff. So we're in this system then where phase 0 does the staking, and how long is it estimated to be? Like if I'm on day one move over 32 ETH and I stake it, how long am I estimated to be locked in until I'm actually allowed to unstake and move the ETH around on the beacon chain?
I wish I had the answer to this. That would go into my risk analysis.
Give me a guess.
Yeah, I wish I knew. If I had to guess, these are total guesses. I'm guessing phase 0 goes live in August, something around that time. I would say to get to phase 1, 6 to 9 months. So you're probably looking at a 6 to 9 month lockup, something along those lines. But when it comes to software development, we all know that stuff goes longer. So let's say 6 to 12 months.
Yeah, they say timelines are meant to be made to be broken. But
right, exactly.
But is it not? I thought it was first available by phase 2. You're saying by phase 1 completion, not by phase 2 completion, you can actually unstake and move around the ETH on the beacon chain?
Yeah, correct. It won't be phase 2. There's a lot of, so kind of how the research and development's working on ETH2 is the researchers go out, kind of build out the research around a phase. The phase 0 spec, which the researchers build out, just went final, a few weeks back, or I guess months back at this point, and then the implementers build it. So the researchers are essentially on to phase 1. They also work on phase 2. So it's basically still a very active discussion when it comes to this. The bridge, I would say, that we're talking about of being able to go back and forth between 1 and 2 is kind of the most debated or talked about in the community. It sounds like it's going to be at phase 1 at this point, but it won't be a wait until phase 2. So I do think, I think that 6 to 12 month time frame is what people are looking at as far as lockup goes if they're moving over in phase 0 right away.
So how then, okay, about the transition. So you're going to have ETH that's on the beacon chain. There's a one-way bridge where you have then tokens of ETH that exist on the proof of work chain, which still goes, and then you have the proof of stake chain. So obviously, if you can exchange ETH over to from proof of work over to proof of stake for a one-to-one conversion, then you're not likely to be able to sell ETH on the proof of work chain for less than the ETH on a proof of stake chain. I'm just trying to work through the thought experiment of two distinct assets after phase 1. How would that work? Because I sent you this article that I had put together about how during that lockup period on the ETH that's on the beacon chain, the exchanges, centralized exchanges that are running staking as a service stuff, they'll have database entries that represent this frozen ETH or beacon ETH, and then they would be able to run markets during the frozen period while you can't transfer the beacon ETH, where people can actually buy. Or so someone who's locked up and maybe 6 months later they're like, oh shit, I really need the money. Then there's a market to sell it before the unlock time. So how is this viability of this kind of market, and how would that be impacted by the transferability which happens after phase one?
Yeah, I enjoyed your article. I think you hit a lot of good points on the head. And this is one of those things where I think we're going to kind of have to let the market play out. I'm not sure. I mean, if you think about this, right, if I decide to send my ETH over immediately on phase zero, I'm now locked over there, but I can't actually send, there's no state transitions or anything. So I can't actually send it to anybody. So theoretically, an exchange can't work as we've imagined exchanges working. I think maybe you will see exchanges doing like an IOU trade, but I think it's going to be like shitcoin exchanges. I can't imagine. I mean, maybe you're way more tuned into exchanges than I am probably, but do you imagine an exchange offering this kind of IOU with an unknown deadline on, redemption of this beacon ETH, as you're calling it? I kind of see this playing out as just, people transfer. There's not really this beacon ETH versus ETH. It's just known in the community as ETH. And if you locked it up, you're waiting for the chain to launch, but you're getting staking rewards, because exchanges don't really have much to do here because they can't transfer funds around.
Right, but staking is a huge, a popular service on a lot of the exchanges, and it, despite how easy it is for you to run an ETH1 node, a lot of people struggle with having that set up and being able to stake reliably. So they actually trust larger centralized exchanges to handle the staking for them. And when you have a lot of these, if we imagine that there's a lot of users that have decided to engage in just staking as soon as possible with a centralized service, then suddenly you do have database entries that can be, basically IOUs, which cannot be withdrawn. So then the centralized exchange has full power to credit the actual BETH that they receive and to penalize as necessary if there's any issues. And then there would be a market where someone who regrets staking will sell it at a discount, because obviously you'll have this ceiling when you can move one ETH over for one BETH exactly, then it'll more likely trade at some discount. Don't you think that would emerge as a market?
Yeah, it definitely could. I just don't know if, like, let's say Coinbase, right? They're offering staking for Tezos. Are they willing to take that kind of like lockup risk early on? And, there's no denying that phase zero is a very initial stage of ETH2. Maybe they do. Maybe they get hungry and see the yields and consumer demand, but I just don't. It's hard to say, to be honest. They would have to be very clear that, I'm sorry.
So sorry, but what do you mean by lockup risk? For because anyone that's staking is able to stake, and they're going to get rewards if they're running the validators properly. Like, what is the big risk that exchanges are doing? They're already offering staking services for other coins.
Yeah, but any ETH. So say you're a Coinbase, right? And a customer says, "Hey, yeah, I want to lock up my 30, or I want to stake my 32 ETH." That 32 ETH cannot be transferred now, right? So yeah, theoretically, they could make up this IOU database like you were kind of talking about, which we might see play out, but the Coinbase themselves can never move that 32 ETH off of phase.
But they don't need to. They just have a database entry, and then they're safely staking it within the beacon chain, and then it's just a database entry which its users can swap around, and they can earn tons of trading fees on in the meantime.
Yeah, they could. I mean, maybe they will. I still think, given it's technically called phase zero, there's definitely inherent potential risk there. I just don't imagine, given the shorter timeline between phase zero and the eventual bridge of, maybe a year, 6 to 12 months or whatever, is it worth them setting up and doing when it would be way easier for them once it comes to just going back and forth? Maybe they will. I don't know. It'll be interesting to watch this, if it does, this kind of IOU ETH play out, though, because obviously it'll trend to 1-to-1 over time as we get closer and closer. But kind of early on, you could see 20-15% returns maybe, because when it comes to staking and rewards, the less staking there is, the higher return to validators, and as more come online, that kind of goes down. So just to watch that yield and trading play out over time could be interesting.
So what you're describing for people that are listening, then the yield that you can get when you're staking on the Beacon chain for 2.0, it varies depending on how much ETH is staked in general. So you can earn anywhere from 18% to like 2%. And it starts obviously with, you have to have at least, I think, 60,000 validators before it gets fully staking activated, right?
Yeah, around 500,000 ETH needs to be staked for the chain to bootstrap.
Right, and then once that gets going, it's a 18% return, and then as the more and more people are staking, it gradually declines, which I think it supports even more what I'm saying, that people are going to want that. They're going to want access to that, and exchanges which can offer the staking service are going to get people wanting to convert their ETH and earning those returns. I don't think that means that the IOUs would trade at a premium, because in order to create those IOUs, you have to actually convert, and you can actually convert one-to-one. So it's always more economical to buy ETH on the proof of work chain and then convert it in order to stake. But I do think it would potentially down the line trade at a discount, where there's a liquidity preference for people who have locked up and then they regret it, maybe because the rate's gone down. But can you talk more about the risk that's associated with this? When you said if it's phase zero, so it's very initial. So what could go wrong where the IOUs, for example, that exchanges have for the BETH, like how would that get handled? What sort of situation are you imagining?
I think it's just time risk, right? Like this is an influx development project. Like we just kind of joked about, when it comes to software development, you always need to expect a little bit longer than it's actually said. So, if everyone decides to stake in phase zero and it's expected that it's going to be 6 months, the reality is it's probably going to be 9 to 12. There's capital risk when it comes to staking, right? You're putting your capital up. That's very high when it comes to phase zero. You're basically taking your capital and saying, hey, I want to earn interest on you, but I can't withdraw you. It's kind of like a CD, I guess.
But that's not the exchange's problem, right? That's the user's problem. And if they regret the time it's taking for them to withdraw the coins, the exchange can run a market and let other people take over the BETH. I'm more interested in the any risk you see where they have to, like the Beacon chain will have to like take away the BETH or like undo the staking rewards that's been distributed. Is any of that kind of risk what you're thinking about?
No, I don't see that happening. I think it's just more, I guess I kind of went off to the user risk, and you're still thinking exchange risk. I agree with you when it comes to that. I mean, theoretically, the exchange could just create a market for it if they wanted to.
Yeah, so that's sort of what I'm like cornering you on, is that I really think there's definitely going to be an IOU market. I think the fact that there's going to be these high returns in the start is going to attract the larger exchanges. I'm not going to name names, right, but I guess you name Coinbase, or they're a bit slow and technically not super great on a lot of things, but maybe like Binance or OKX tend to be pretty fast with these kind of staking things. And OKX themselves, I think, announced recently that they're running on the Topaz testnet. So I would really assume that users are going to trust them. They're going to stake with them. And precisely this you're saying about time risk is what will lead to a market emerging where their liquidity preferences are going to be selling BETH for less than 1 ETH. And because they're earning rewards, they're willing to take a little bit of a hit in order to earn money, so to speak, in the proof of work ETH token. And so I'm pretty sure there's going to be, it's going to be in a walled garden, right? There's not going to be an ERC20 token associated with it because of all the staking risk that's associated with it. So maybe Coinbase is staking it and they're doing it really poorly, so they get penalized a lot, but Binance is doing it great, so their yields are net going to be higher. So there's going to be these differences which require it to be in a walled garden, but I'm pretty sure there's going to be an IOU market for sure.
Yeah, I mean, I'm all for markets watching this play out. I mean, if there's demand for staking, that's great for the chain, because that means more people are going to be coming online. That's kind of this idea, you know, we talked about a few minutes ago about the sliding scale. Like, you want to incentivize people to the chain to stake, and then at a point, it's kind of like diminishing returns is maybe the wrong word, but like, you don't need as many validators at a point. So this kind of like APR or whatever starts going down. So I'm interested to see what happens. I mean, I'm sure this is going to happen. Exchanges are going to try to capture on this. There's a lot of money going around here when it comes to staking, but I'm sure the free market's just going to kind of play out.
Yeah, so phase 0 is the staking, and sharding is phase 1. How does it work? How do you migrate if you're a smart contract and you're running some kind of project on the proof of work chain? What does it look like to actually migrate everyone and everything that's going on that chain over to the phase 1 with the sharding? And where as I understand it, you have to choose a shard, and depending on which projects are choosing which shard, it might impact performance in the communication between them. I'm not sure if I'm correct there, but how does that phase 1 sharding work?
Yeah, so you're close on that for sure. I mean, there's a lot of research go around about cross-shard communication. So months ago, the community was kind of worried about communication. It seems like the research teams are slowly figuring this out, where it's not going to be as big of a deal. But, you know, at the time, it was, will shards get crowded? Because, like, well, all of DeFi want to go on one shard. But kind of like I said earlier, these aspects are still pretty open when it comes to the research, even though I believe the phase 1 spec is pretty close at this point, and I'm sure phase 2 will get there soon. But as far as like the ETH1 transition, Vitalik put out a post a few months back, and I know their research team has been. So by the way, this is all open. You can go on, just Google GitHub Ethereum 2 specs, and you can watch all this kind of play out in real time if anybody's interested. But one will basically just be migrated into a shard on ETH. So there's this concept of execution environments, which means that ETH1 can just be folded into a shard. So the idea is, let's say there's 64 shards on ETH2, ETH1 will just be one of them. So the state of everything will be moved over. And at that point, ETH1 can basically just freely interact with ETH. If you're on ETH1, you have smart contracts, they'll keep working. So this was a pretty big research breakthrough a few months back.
So I'm still having trouble visualizing, like, because you got all of these smart contracts, all of these people with ERC20 tokens on all kinds of different addresses and accounts on the proof of work chain. How do you effectively, without disrupting what everyone's doing, how do you get that over onto the proof of stake chain? Like, if you could try to explain it in some way where people can understand it a bit more easily.
Yeah, I guess we need a couple hours for this, probably, to be completely honest with you. This concept, like I mentioned, of execution environments, it basically means you can run any type of environment inside of a shard. So you can basically have a shard run ETH1 as it is today, but be secured by the proof of stake side. So you basically totally take the state, the ERC20 balances, the ETH balances, and you take it over. It's now part of the shard, and it can interact with the rest of the network. But I'm going to start doing the ETH2 team a disservice if I start to describe it any longer.
Okay, so basically, the people who are, so the transition isn't going to happen overnight. It's not going to happen even within a year, because there's going to be people that have maybe not even claimed their ICO balance from Ethereum sale. You're not going to have this kind of situation. I would imagine UX wise, it would be a nightmare if people are just at a point where they're shit out of luck and they have value in assets on the ETH1 chain, but maybe the ice age has hit, and then no miners are mining anything. So how do they even move anything? At that point, will that ETH1 exist in a shard where people can still access it through the beacon chain?
Yeah, that's right. They will be able to. So this is actually, it's a really good point. It's a concern I had early on. Although, to be honest with you, it would be quite interesting. I would love to see an experiment of how much coin on each chain is like just hide or lost keys. I do think that would be quite the experiment. But it's obviously not ideal. But because the state's being folded into this new ETH2 consensus mechanism, people are going to be able to, even if you were part of the pre-sale and you wake up from a coma in 30 years, you're still going to be able to go in and access this. Basically, wallets are just going to be redirected to know that now you're part of this ETH2 shard, and things will, you as an ETH1 user, you actually will not notice anything different.
Okay, that's cool. I think that's a good way to explain it. So with the coma, like that's an exact kind of scenario where people can really understand that, all right, it's actually pretty safe. So how does it look then when the ice age hits finally, which has been kind of pushed back over and over and over again? And let's say ice age hits, I guess it's a gradual thing, right? Where the difficulty just goes up and up and up and up, and then mining becomes non-economical or uneconomical. How does that play out? And when do miners just shut off and give up? Like, how does that look? How does it play out?
Yeah, so once the ETH1 chain is kind of like put into a shard on ETH2, at that point, the proof of work chain isn't really needed anymore. I mean, it's basically forked off. Who knows what kind of games are going to happen when it comes to miners and ETH Classic and all this stuff. There's all kind of theories around, ASIC miners, GPU miners. ETH Classic has interest in this stuff, keeping the chain going. But, once kind of this ETH1 state is put into a shard on ETH2, there's really no need at that point for the original chain to continue on. I think it'll just, I imagine it just dies out. Maybe someone will try to take it over and kind of make it the proof of work Ethereum. Who knows, right? We've seen weirder things happen in the past.
But isn't that essentially what Ethereum Classic is, though? Like the proof of work Ethereum? Or
Yeah, it absolutely is. But it's a pretty dead chain. It maybe we'll try to capture on something when it comes to this, but as far as like the Ethereum community goes, and we talked about the social contract earlier of this all moving to proof of stake, I don't think there's really going to be much left when it comes to that. But I wouldn't be surprised if some kind of random interest group tries to do something when it comes to the old chain.
Yeah, this must have been baked into the expectations of the people who invested in all the ETH mining equipment. I think some traders here have been talking about maybe Ethereum Classic is going to pump because the miners have to go somewhere. They're not going to just shut their miners off and throw them out the window, but they'll point them at Ethereum Classic just to get some kind of yield, which will bring some security and maybe more interest. I don't know. Or some people are saying maybe they'll fork, like you said, some games where someone will fork out the Ice Age and try to keep the original or the second original Ethereum chain going and keeping it not proof of stake. But I guess that's all just speculation, right?
Yeah, exactly. Who knows? Like I said, I'm sure we'll see games played. We've seen plenty of fork and proof of work games played in the past when it comes to multiple different chains. So I'm sure someone's going to try to financially capture on that point. But in reality, we can just drop POW when it comes to Ethereum and don't have to rely on it anymore.
And so one more question about this transition then. I think you've answered a lot of the good questions there. So phase one will do the sharding, which will then activate the chain in terms of allowing transferability. So what exactly is going on in phase two? That's state. I read something about state changes because you're ethhub.io, right? So I've used this resource for a lot of my reading up on this topic. So maybe you can explain what is then happening in phase two, because my original understanding was that that's where things really allow activation and moving around the ETH on the proof of stake chain. But what exactly is happening there?
Yeah, no, you hit it on the head, I think. This is where state transition comes in. I see phase two as, to me, like the fully realized proof of stake vision of Ethereum. I think, there's a road to get there between phase 0 and 1, but they're kind of necessary steps, and they're cautious steps for a reason. Let's slowly roll this out, and it's a complex upgrade. There's no doubt about that. But I think phase 2 puts us in state execution. You can start, really transacting, sending ETH around, using DeFi, and exploring different shards. And this is kind of where we finally realize that, I touched on earlier. I mean, it's been a long wait. I'm not going to lie, right? I mean, back in 2014, when I was exploring Ethereum, this was all talked about. So we're 6 years down the line now. We're probably 7-8 years once it comes to phase 2. So the community is excited for it. And phase 2 kind of gets us over that finish line.
Okay, but it'll still be usable after phase 1. You can then move things around. I can send you. I think you did you mute or?
Oh, sorry, your question kind of cut off. Yeah, between the phase 1 and phase 2 are definitely important aspects of the two-way bridge and the folding of ETH1 into 2. So if you think of phase 0, it's kind of like, hey, we can start staking. Phase 1 gets us a little further. We get the bridge and the folding in of ETH1 to 2, and then phase 2 gets us this full state execution.
Okay, so it actually does become a two-way bridge where now you can move. Okay, it's a two-way bridge in the sense that ETH1 moves into a shard on ETH2, and then you can actually move Beacon POS ETH into that shard on ETH1. Okay,
exactly.
So that in that sense, it's a two-way bridge, but you can't like. Okay, yeah, I think it makes sense. All right. So then you mentioned a lot about this is Ethereum's goal is to be then the proof of stake chain that dominates in the space. I was talking to some people earlier who are involved with EOS, who are involved with Tezos, and I could go down a list of tons of other proof of stake chains who have a similar goal. Like you call them the ETH, attempted murderers or whatever. So if let's use one example. If I have 10 ETH. I can't actually stake. Is that correct? How does that work for someone who doesn't have the magic number of 32?
Yeah, so you theoretically can't fire up a validator on your own personal machine, but we're starting to see staking pool options kind of come up. So the first one I've seen is called Rocket Pool. So it runs through smart contracts. It's, they don't kind of like centralize the stake or anything. So if you had 10 ETH, you could join Rocket Pool and you would just get your portion of rewards, right? A lot like proof of work pool would work, a mining pool would work. But to run your own local validator, yes, you wouldn't need 32, but we're definitely seeing options pop up. And of course, exchange staking would be one of those too.
Right. And so another part of this discussion, especially when it comes to DPoS versus POS, I've read some of Vitalik's commentary on this, and he uses the term oligarchy often when talking about DPoS. What do you think is the main difference, especially in Tezos, where they have apparently like hundreds of validators, 400 to 500 or so? I know EOS is a bit more centralized in that regard, where they have 21 block producers or some shit like that. So how does DPoS lead to oligarchy, but the Ethereum version of proof of stake avoids it?
Yeah, I would say first and foremost, I think we touched on earlier, even though we had a bit of back and forth on it, which is totally cool because I think it's a good topic. But I think Ethereum being launched back in 2014 and having this long proof of work stage and a lot of distribution has helped spread out centralization vectors. I think things like Tezos, EOS, and some of these Ethereum attempted murderers, as I like to call them, they're heavy in VC bags. VCs kind of suck up all the coins and are hoping to just, keep them in stake or dump on retail. That's one of the common trends we're kind of seeing when it comes to Ethereum competitors. And I think the biggest thing when it comes to DPoS versus Ethereum staking is, like you mentioned, like EOS has 21 core validating nodes. I expect Ethereum to get to 10 million total stakes, you're talking 312,000 validators at that point. Now, obviously, people can run multiple validators, but you're talking thousands of different beacon nodes and validators uniquely running the network. So that's where the big difference of DPoS and where Ethereum is trying to position itself when it comes to proof of stake is at. And I think, people maybe have questioned or been disappointed with the progress of ETH2, which, I sympathize with, but at the same time, I disagree with, because I think Ethereum's trying to focus on decentralization first and foremost when it comes to proof of stake. And, the community is definitely not going to settle for these DPoS type solutions where you have 4 to 21 nodes running the entire network.
Right, but there's also, I guess, in Tezos, there's not that few. It ends up being, and I don't want to name too many of these other projects, but there are other non-DPoS staking protocols. And so, do you think that Ethereum will win out because of just pure like development interest and stuff, or what is it that you think is going to drive the value of Ethereum versus, and I don't just mean price, but just like what they're bringing to the table, the utility and stuff like that, versus the other POS and DPoS coins?
Yeah, it's a good question. I think, interestingly enough, that community and mind share is the most important thing in the crypto space. I think, Bitcoin's a great example of that. It's been around now, 11 years. It's got a very entrenched community. People are invested in it. People are, interested in seeing it succeed. Ethereum's, 5 years behind that, but it's not too far behind that. But at the same time, a lot of these newer VC chains, as I like to call them, they just don't know how to capture this organic community growth. I mean, you have VCs buying up in 2018, 2019, 20, 30, 40% of the total share just based on these technology promises. But at the end of the day, I think these technology promises are way ahead of their time. I mean, you don't need to promise 10, 20,000 transactions per second today. I mean, the Ethereum chain's doing 13 transactions per second, but at the same time, it's attracting pretty much all of the smart contract developers in the space. I don't think any of these Ethereum killer chains are attracting any. So I don't think they quite realize how important community and entrenched mindshare is. I mean, it's hard to pull a human away from something they truly believe in, especially as time goes on. And I think that's where these chains are going to fail.
So if you were to, is there any project out there that I wouldn't ask, are you scared of them, but are you potentially think that Ethereum could learn from other chains, or one that you think could potentially be a challenge to Ethereum? Is there any project whatsoever that interests you outside of Bitcoin?
I would say no. I think the only competitor to Ethereum, if I had to say it, is Bitcoin. And I think it's just because we've just seen two different communities pick slightly different variations in their ideology. I'm truly not, unless a chain comes around. I think a friend of mine, David Hoffman, had a tweet the other day, and it was like, if a competitor comes along with a layer 2 solution that's superior to Ethereum, and they fork over the state imbalances of Ethereum to that chain, that could be the first real Ethereum competitor. But there's no reason to think that Ethereum believers are just going to hop over to another chain because of better technology. So I think, to be honest with you, the only competitor at this point I see, and competitor is the wrong word because I see the two communities so different. But the two players I see are Bitcoin and Ethereum.
Yeah, I mean, I think it's more, I wouldn't call them competitors either. I don't think ETH is competing on the same level as Bitcoin in terms of security. And I think the narrative is pretty effective that you used before, of there being a dominant proof of work consensus algorithm chain and then one dominant proof of stake. I think that's probably a bit more fitting, and I would be very, very surprised if the ETH market cap were ever to truly challenge the Bitcoin market cap. I'm sure you'd be very happy if that happened, but I don't really see that happening. But so
I guess were you not around in 2017?
Well, this was, I think, a very, very special market environment where there was just a lot of crazy pumping. I mean, if you remember, if you were around for the Ethereum Classic fork, there was a time where there was more volume happening on the Ethereum Classic pair on the Poloniex than even Ethereum. So there was also a almost flipping happening there, even because the market environment was so stupid. So I think when you have these bubble type market environments, there's not much rationality happening.
Yeah, no, that was an interesting time. I'm glad for that though, because I got to dump all my shitcoin ETH Classic at a very high price.
Yeah, just like when Bcash forked off from Bitcoin, there was some really stupid prices. So all right, so we've held you here for quite a bit of time. You've been a good sport on everything. You're a trader, right? So have you seen on Bitfinex the magnitude of the Ether dollar longs? There's some really big bets being made on ETH's price here. What do you think? What's your market assessment going forward, and especially going into ETH 2.0? Do you think that's gonna spark the bull market, or what do you think?
Yeah, I'm curious to hear what you guys think about this. I've been tracking the ETH USD longs versus shorts for a while in TradingView on Bitfinex. It seems to be never-ending up trail. That's an interesting one. I don't know what's really going on there. I mean, as far as market dynamics, I'm not going to lie, over the next few weeks, like the spot to be probably Bitcoin. People are hyped up about the halvening. I wouldn't be long ETH Bitcoin ratio over the next few weeks, but I do think the market expects ETH2 to fail, has expected ETH2 to fail, and we could see, a realization of, hey, this is real, this might happen. I think we could see that happen. So I would be scared to be in that, short position on ETH whenever that starts to play out. But, who knows? The markets are their own beast. I mean, we just joked about, the flippening and ETH Classic taking over ETH, and like looking back on those moments, the markets are emotional. So if I had to be in a position over the next couple of weeks, maybe I'd pick Bitcoin, but in the long term, I'm still going to stick on ETH because I think this ETH2 vision is going to play out, and people are going to be pretty into it.
So short-term bullish Bitcoin, long-term bullish Ether.
Yeah, I would say I'm always long-term bullish Ether, but I'll be a self-admitted shill when it comes to that. I won't shy away from that.
Fair enough. Yeah, I mean, so you're not actively trading on, like, because I think it's probably one of your Ether friends that have a gigantic stack of ETH that are on Finex taking a punt long. I feel like that's really the only. I can't think of anyone else that would do such a thing.
No, I've kind of I love trading. Like, I'll dip in it here and there. I'm kind of just a hyper emotional, not myself emotional, but I'm too emotional to day trade ETH. I'll admit that, but I like feasting on the emotion of the market. So I buy ultimate lows. Like when I see chats and Twitter just absolutely freaking out about downtrends, I'll buy. So I've picked up some sub 100 ETH over the last year or two now, and I'll flip them a little bit higher. But beyond that, I don't dabble too much in trading anymore. The gray hairs that I have going on at 32 are signing up to trading.
Yeah, there's this meme about the guy who's clearly like in his 60s, and it says if he has asked if the cryptocurrency trading stresses him out, and he says no, but he's like,
yeah,
he says he's only 25.
That's definitely how I feel sometimes. So there's not enough time in the day for me anymore. Although I do miss those Bitcoin trading days I used to be in, having the laptop open with the graph while I was sleeping. So who knows? Maybe someday I'll go back.
Yeah. So all right, well, we can wrap this up then. Is there any topic you think we should have touched on, or you wanted to try to rediscuss? If there's anything you think there was a gap, or
no, I think it was great. I love like I said, I kind of came in for Bitcoin and moved over to Ethereum, and I don't think there's anything wrong with the visions of the two communities, and I think they're going to be around for a long time. And I think the community should talk more. I enjoy these kind of debates and back and forth, and I don't think it has to be as hostile as it seems. So I appreciate you inviting me on and just kind of talking through all this stuff.
Yeah, and by the way, on Lightning, a lot of it's private, right? So you can't actually detect the nodes, and So a lot of the activity on Lightning, you can't by design actually measure everything. But anyway, so tell everyone like where they can find you, what you're doing with ETH Hub and Gnosis, just so that they have an idea of where to find you.
Yeah, for sure. You can find me on Twitter at EconOAR, so ECONOAR. And I work in Gnosis, so you can join our Discord, reach out to me, and we have a Discord going on. We just launched Gnosis Safe Apps, which is multi-sig that can access DeFi apps and stuff. And then ETHubs at ethhub.io. We do a podcast every week called Into the Ether, just talking about Ethereum and stuff. And I'm always here just to chat about Ethereum. I'm really into the education side of things to help explain stuff to people. So just reach out if you want to chat.
Yeah, and the ETH Hub, I found it really useful as I was digging into the ETH 2.0 stuff. You had a really well organized and cited set of informative material there. And I went into this totally not knowing anything just a couple of months ago. And so it was really helpful. So thanks a lot for spending the time with us. Really appreciate you coming on and taking a bit of heat, but also bringing some good education on some of these topics. Yeah, thanks a lot for your time.
Yeah, thank you. I appreciate it.
All right, cool. Yeah, so we'll put this on. Thing though is really crazy, and like Flipper here, he watches all the data and crunches the data like crazy, and he's really bearish on ETH BTC. I think you mentioned also you were bearish in the short term on that, but the idea that these ETH USD longs get squeezed would be really interesting development.
Yeah, I just kind of think people are going to flock into Bitcoin for the halving narrative. But like what's funny is usually it doesn't happen for months after. So, but I feel like it's so hyped up now that people are going to try to flock in. We'll see. It's interesting.
Yeah, so you do this. I didn't actually catch the podcast before. It says Into the Ether. You do it every week?
Yeah, we do a weekly recap, a news recap every week, and then we have a guest every week. So it's an Ethereum focused podcast.
Okay, cool. Yeah, I mean, the thing that I learned most on this was that I didn't realize that it wasn't until it was first at ETH, the phase 1, where you could actually move the beacon ETH around. I thought it was actually going to be even longer until phase 2.
Yeah, that's a good. I'm really interested to see how exchanges play this out, and there's a lot of interesting aspects right around like multiple assets and things like that. So, but I think what could maybe kill that is if all of a sudden you're like, holy shit, 5-10 million ETH staked out of nowhere on phase 0, and then it's not really worth it for exchanges. So there's a lot of market forces to play out.
But why would it not be worth it? I still don't understand that. Like, if they're taking a cut from all of the staking rewards that happen, then all they're doing is providing a similar service they do for other coins. They take a little bit off the top, and they're not really facing any risk beyond the normal custodial and operational costs that they are facing. Like, why would the magnitude make much of a difference?
Yeah, I mean, just because it's early on in the software development, maybe. I don't know.
That makes me think that you're like. That makes me think though. That's why I was asking before. Like, are you scared that like they're gonna have to roll everything back, like, and undo all the beacon ETH staking stuff? Like, why is this concern about what could happen if there's a higher magnitude of people interested to stake? I don't quite see it.
I mean, I think that will be baked into the yields, right, and the returns. Like, if the market will just kind of determine that.
But it's determined only from the magnitude of those coins staked on Beacon, right?
Right. Yeah, exactly.
And so just because, I mean, yeah, okay, I guess if there's, it's not like you guys are going to let people lose funds. Right. So, I mean,
yeah, who knows? Well, it's going to be an interesting time. I don't deny that.
Yeah, I mean, because I'm trying to think how it could blow up in an exchange's face offering this, but and then obviously because it would impact those of us that might be trading and interested to stake. But anyway, we could talk for ages about this. I'll let you go. Thanks a lot for spending the time with us, man. Really appreciate it.
Yeah, I appreciate it. Hopefully we'll do a follow-up after phase 0 or something, but thanks for the time, guys.
Yeah, that sounds like a good idea. We'll We'll hold you to that.
Cool. Thank you.
Cheers. All right, that was almost 2 hours. Not bad. He had some pretty fucking good memes, some good talking points to shill ETH. I wasn't fully able to punch back.
You never called him a scammer or asshole. I'm impressed.
Yeah. Wavin, your microphone doesn't seem to work.
I like this version of Swapman.
This is the only version. It's the same version. What do you mean?
No. You have the hostile version as well.
But that's only if we're having a real guest on who's coming on in earnest and everything. That's totally different. If it's a scheduled guest where it's normal. This other situation was sprung here, unscheduled and everything.
Yeah, but even with Richard, you could politely let him dig his hole, right? Not just scream at him.
No, because that's not how that guy rolls. He will do monologues and avoid the questions and end up taking up. If you let him, he'll end up taking up vast majority of the time just to dick around.
Yeah, you got a point there, though.
That's why I took that strategy, because I've seen how otherwise it operates. No, I mean, the thing is that guys like Eric, I have known since back in the day. There's a lot of people who are frustrated with Bitcoin not being dynamic for scripting, so they shifted it over, and he was quick with the memes saying that, oh, what do you guys do on Bitcoin? Just move Bitcoin around. Ha ha ha. And he's bragging about all the fucking shit that the dApps they're doing on Ethereum and shit like that. I still think that Lightning and a lot of these developments are exciting. Also, the upcoming base protocol changes and stuff like that. But I think that's an effective meme where he says, all right, it's basically a concession to Bitcoin. So ETH is moving to proof of stake, and they're saying, all right, Bitcoin, you win. Take proof of work. You guys dominate that, and we're just going to dominate proof of stake. I think that's a pretty effective meme because it's an implicit concession to Bitcoin, right? It's basically saying, like, Bitcoin, you're too good. We can't compete. We're going to move over to proof of stake and fight with the little guys. And he had also the VC chain meme. I've heard that from other Ethereum people too. Yeah, Vavin, I thought that was interesting too. Is your microphone not working? Are you trying to talk and you can't, or what?
Is it working now?
Yeah. Now you're on.
Okay. This new mic has this little mute button, and I didn't realize it was on.
But yeah, saying that people will be bearish on ETH because of the delays in the upgrade, and then they pump when it succeeds. I think it's a nice little trading call he made.
Yeah, I'm gonna pay attention to that shit.
I'll just never forget that post DAO hack ETH dump. It was one of the most epic dumps I saw.
I remember because I was traveling to Mexico when it happened. I couldn't believe it.
I also know people that, like him, made the shift from Bitcoin to Ethereum and then shifted back after DAO. There was a handful of people that did that. And then you got the random people who fucking went off to Ethereum Classic, like, not ironically.
Yeah, I wonder why ETH Classic still exists.
Probably the miners themselves are trying to hold it up.
Yeah.
I think just because of Barry Silbert, basically he kind of single-handedly banks that shit.
Yeah, Silbert was the basically like the single force that kept that market up. I remember, um, like, remember Marty was on here with Arcnix mining Ethereum Classic, and they were fucking screaming when the Poloniex supported the fork and did the replay protection stuff. I thought that was it was crazy just how much volume Ethereum Classic was doing, and then like watching Silbert draw a line in the sand saying this is not going to stand. You violated a core principle in crypto. But I heard also one of the points this Eric guy made, which also Strawberry had made, was yeah, like they didn't try to discuss too much about, oh, it was okay to do the DAO rollback. They instead say, yeah, okay, maybe DAO rollback was not so great, but look at what happened with the parity funds, which are all fucked up. We didn't accept a change to the protocol to rescue those funds. And then they're using that to say, look, Ethereum's growing up like a big boy. And that's the first time actually I've heard this talking point about, oh, the DAO hack had to be done for network integrity purposes because of the switch to proof of stake. That's actually the first time I heard that. But look at Bitcoin. Bitcoin's having a nice move, by the way.
Nice.
94.11.
Oh yeah, kind of feeling bummed out. I took out 50% of my long out.
$10.5, here we come. Yeah, Saj. Gotta get that 9.5.
That guy was also bullish on Bitcoin here. He said 10K is inevitable.
Oh, I think 10K is fairly feasible. I mean, man, people are just throwing money at this right now. Whoever didn't buy at K, 5K, 6K is looking at that shit and is thinking it's just gonna keep going up and I'm gonna lose. So they're just gonna come back in.
Yeah, some of that is driving this shit.
All the miners are rubbing their hands together.
Well, they're gonna be doing something else with their hands in a few days here.
Hell yeah.